Hey everybody, Rob Maurer here, and today we're going to be talking about a topic that has been in focus here over the last couple of weeks, I would say, and that is electric vehicle incentives. We have changes here today in the UK, and we also have a new proposal being discussed in the US. We also have news on Tesla's assembly plant in the Netherlands, and some discussion on competition. First up, a quick look at the stock. The market roller coaster continues, Tesla finishing down 6.9% today to $653.16. That compared to the Nasdaq, also with a tough day today, finishing down 3%. All the discussion here continues to seem to be about yields. The 10-year jumped up overnight to now about 1.7%, continuing the rise that we have seen this year, which so far has been about 79 basis points. Alright, so a couple of big EV incentive-related stories for Tesla today, capturing a lot of the attention in the news. First up, in the UK, the £3,000 grant for electric vehicles under £50,000 has been lowered to £2,500, and the cap is now at £35,000 rather than $50,000. This seemed to be a surprise to everybody today, and this squarely impacts Tesla with their Standard Range Plus Model 3 offering in the UK, starting at $40,490. Per thetimes.co.uk, they had a source that told them, quote, "We're ending the Tesla subsidy. Taxpayers should not be subsidizing people to buy £50,000 cars," end quote. So while this does impact other electric vehicles that are under £50,000 but not lower than £35,000, it does seem squarely targeted at Tesla. Definitely a disappointing update for Tesla, especially as we had talked about earlier this week. Tesla had been lobbying for a very small £50 tax on the sale of internal combustion engine vehicles to offset the cost of these electric vehicle grants. That was likely in part to Tesla anticipating something like this happening because the UK Treasury had allocated £403 million for EV subsidies through April of 2023. And according to the Times source here, they're not changing that amount available. They're just trying to spread that further, so lowering the subsidy amount and reducing the cap so that fewer vehicles are getting that subsidy right now. As for the impact, the UK has definitely been a strong market for Tesla over the last year, and while this might have a bit of an impact, I don't think it's going to be anything too bad. One of the huge incentives for EVs in the UK is for business vehicles, because electric vehicles pay a dramatically lower benefit in kind tax, which is an annual tax, which can be thousands of pounds every single year for internal combustion engine vehicles. So even with the changes to the £3,000 grant, there are still some pretty strong incentives for Tesla purchasing in the UK, and it should still continue to be a strong market. Additionally, Tesla probably has room to absorb most, if not all, of the entire price difference here, simply based on changes to foreign exchange. So this is something that we talked about when Tesla lowered prices in other countries in Europe, really those equalized changes to foreign exchange. If we look at the UK though, the pricing has been steady for the Standard Range Plus Model 3 since the last time I could find it on Wayback Machine, which was November 20th, 2020, it was still at that £40,490 price. So at that time, that was $53,450 but because the dollar has weakened, that same price today is now $56,390, so a difference of just about $3,000, which ends up being about £2,100. So if Tesla said, okay, well, we want to drop the price by £3,000 to offset this subsidy going away, 70% of that price reduction would be offset just from the changes in foreign exchange rates. I wouldn't be surprised if we see that from Tesla. The UK market is also a little bit unique in that it's right-hand drive, so Tesla needs to keep demand for right-hand drive vehicles at a certain level just to make sure it's worth converting the production lines over. Because of that, it's not quite as simple as just saying, oh, ship those cars over to a different country instead, which I think could make a price cut here a little bit more likely. The other thing to consider here is that because the grant only applied to the Standard Range Plus vehicle, that makes it a lot harder for a customer to opt up for the long range or the performance vehicle, knowing that by doing that, they would end up losing the grant. So this might actually drive the take rate on performance and long range a little bit higher. That gives a little bit of extra margin, which Tesla can then use to drop prices if they want. The counter argument for that would be that, okay, without that £3,000 grant, maybe people with that standard range vehicle aren't going to select as many options. So that could drive overall margins down a bit as well. But factoring all those things, especially the foreign exchange rate, I think it's clear that Tesla does have some wiggle room on pricing. All right, shifting over to the US then, I think I just want to read the first paragraph here of this Verge article because it kind of fits what we've been talking about over the last week or two. Quote, with the $1.9 trillion COVID relief bill signed into law, Senate Majority Leader Chuck Schumer, Democrat New York, is ready to tackle the next major challenge, President Joe Biden's call for a massive infrastructure bill. As part of that package, Schumer said he plans to include his ambitious proposal to get every American to swap their gas-guzzling car for an electric one, end quote. In an interview with The Verge this week, Schumer said, quote, it's a bold new plan designed to accelerate America's transition to all-electric vehicles on the road, to developing a charging infrastructure, and to grow American jobs through clean manufacturing. And the ultimate goal is to have every car manufactured in America be electric by 2030, and every car on the road be clean by 2040, end quote. In an op-ed in the New York Times in 2019, Schumer had laid out the basic concept for a plan he'd like to see implemented, saying, quote, "First, it would give you a large discount on an American-made electric vehicle when you trade in a gas-powered car," end quote. Adding that second, the plan would make electric vehicles and battery charging infrastructure accessible to all Americans regardless of where they live and work. And third, quote, "The plan aims to establish the United States as the global leader in electric vehicle and battery manufacturing by providing grants to retool existing manufacturing plants in the US and build new ones in this country that specialize in those technologies," end quote. So Schumer seems to want to structure the incentive for the individual vehicles at least around trade-ins, and flipping back to the Verge article where he was asked about this, quote, "He wouldn't say how much of a discount, only that it would be quote-unquote deep. A spokesperson later confirmed they are eyeing rebates that are quote-unquote more generous than the current $7,500 federal EV tax credit," end quote. Alright, so just a couple of quick thoughts on this. Obviously, a ton more attention now rotating towards infrastructure, climate type of things, electric vehicles coming into focus now. I'd expect we'll continue to talk quite a bit about this over the coming months. As for Schumer's comments and the plan, obviously I think the direction is exciting, and of course we'll have to wait for full details on any sort of plan, but I'm not exactly sure at this point that I'm going to end up loving the structure based on some of these comments. I don't know that you really need a steeper than $7,500 discount, especially when at this point electric vehicles seem to be primarily supply constrained. And if so, I think there are probably better ways to incentivize increasing supply. I don't know, there's a lot of layers of complexity here. Maybe if people are interested, I could pull together a few people and just have a conversation in depth about electric vehicle incentives, how they should be structured, things of that nature, assuming that a carbon tax isn't an option, because I think a lot of people would just prefer to see that, but it doesn't seem to be something that is directly on the table at this point in time in the US. Let me know your thoughts on that, but regardless, we'll continue to keep an eye out for any news on how these various different proposals may be coming along. Alright, next up here is a bit of an update on Giga Berlin that I actually saw after I started recording today. I probably would have put this a little bit earlier in the episode, but we do have an update here from Alex Vogt. He covers Tesla in Germany, and today he has tweeted, quote, "During the meeting of the Brandenburg Committee for Infrastructure and Regional Planning today, it was stated that the production start of Giga Berlin is confirmed for the end of July, latest August," end quote. So without having a little bit more information on this, I would take that to mean that's the confirmed target to start production, not that that is necessarily going to be hit, but at least it gives us a little bit of information to kind of anchor around here and watch for different milestones as we approach that. It's also important to point out that start of production doesn't necessarily mean start of volume production. It could still be a couple of months after that before Tesla is ready to start deliveries. What we've seen Tesla do for both the Model 3 ramp up from Shanghai and the Model Y ramp up from Shanghai is start production sort of at the tail end of one quarter and then not really start deliveries until the start of that next quarter. If they start in July, maybe that's not as likely, but if they do end up starting production in August, then maybe they end up waiting 6 or 8 weeks for the start of Q4 and end up making those first deliveries early October. Tesla broke ground on Giga Berlin at the start of June last year, so this timeline, whether we look at start of production or first deliveries, if those did end up being in October, wouldn't be quite at the pace that Shanghai was. We would have been looking at about 10 months and 12 months there respectively for production and deliveries. Here for Berlin, if we are talking August and October, then we're about 4 months behind that schedule, which is definitely still great. Tesla obviously wants to keep that accelerating, but they have had some permitting delays and things of that nature. And I don't think anyone could be too disappointed in that timeline except for maybe Elon Musk, given the variance in construction timelines for other non-Tesla projects that we have seen in Germany and China. Anyway, we'll keep an eye out for any more information on that, but I think with this news, we obviously had the Model Y bodies show up there yesterday. I think things are looking good. We're getting closer. Production seems imminent this year. All right, next up here, we've got some news in the Netherlands. This is kind of an end of an era. Tesla will be stopping assembly of the Model S and X vehicles at the Tilburg plant in the Netherlands, per a few different reports, because the refreshed Model S and Model X are no longer conducive to that assembly process happening at any point after Fremont. So historically, Tesla had been completing assembly at that Tilburg plant to save on some tariffs, but this was only happening for the Model S and the Model X, so I think in hindsight, this now seems fairly obvious that with the refresh, they'll no longer be doing this, since they haven't done it with Model 3 either. One of the first things that popped into mind for me when I heard this was, does this mean that they're using structural packs in the S and the X? But I think what they've done with the Model 3 shows that that's probably reading into it too far. Speaking of such things though, I wonder if we are ever going to get that call from Elon on the refresh that he said they might do in a week or two on the Q4 earnings call, now that we're almost all the way through Q1. Hopefully something like that could be soon, because we are now starting to see from Fremont some refresh S and X vehicles being transported out. Coding Mark on Twitter tweeted a few photos of some of that action happening earlier today, so we are getting close to those first deliveries. All right, last couple of things here, just continuing the conversation from yesterday. I did end up tweeting out that question from Morgan Stanley's note. Remember, that was, quote, which do you feel represents a more formidable competitive risk to Tesla over time, legacy OEMs or big tech, end quote. Remember, 66% of the Morgan Stanley respondents chose legacy OEMs. We're seeing a very different response rate here, with 78% of the people that actually responded, rather than clicking see results, answering big tech. Now, from the comments, I think most people agree that that binary structure was probably not the best way to ask a question like that, but I do think the difference between the Morgan Stanley investor responses and these Twitter responses here is very interesting and pretty telling. That's why I was curious to ask it, even though I don't love the question itself, but we're seeing a huge difference here, I think indicating that this audience in general is seeing Tesla as more of a tech company versus the respondents to Morgan Stanley maybe viewing Tesla as more of an automaker. I guess perhaps not all that surprising after all. Lastly here, just another BMW announcement from yesterday that they had kind of buried in all of their annual conference stuff. They did share a little bit more information about their fully electric SUV, the BMW iX, which is expected to launch in the US early next year. They said that, quote, the US pricing will be announced closer to market launch, but the iX is expected to have an MSRP starting in the mid 80,000s, end quote. So not too surprising, but definitely more in the Model X category than the Model Y. Anyway, with that, we will wrap it up for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Friday, March 19th episode of Tesla Daily. Thank you.